Hi everyone, I am Karan and welcome to Karan's Gyan. Today I'll be talking about the best stock amidst this pandemic. And the reason why I'm doing this video is because RBI came out with an alarming financial stability report a couple of days ago, because of which on Monday, that means on 27 July, banking sector stocks were in deep negative territory. And it was basically because of this financial stability report where RBI had done stress test for various banks, be it private bank, public bank, or foreign banks. I have this video covered. You can look at the description. Anyways, so RBI came out with this report and it spooked a lot of investors, and because of which, like I said, the banking shares were in deep negative territory. So now, if we want exposure in banking stocks, we need to look for the best banking stock. And the best banking stock in this case is the most cautious bank. So if you want to look for the best bank in the current scenario is the most cautious bank. And the most cautious bank should satisfy the following criteria. It should be giving out loans only to the best borrowers who have the best credit scores. Else, it shouldn't be giving out loans at all. It should look for the best borrowers with scores that show that they'll be able to repay the loan back. Else, it should keep the money with themselves and not give out loans at all. Even for average borrowers, it should only look for the best or good enough borrowers. Second, it should have high provisioning done for possible bad loans. So it should be able to, outline loans that are likely to end up as bad loans and in turn provide advanced high provisioning to these bad loans. So this is the second criteria for a cautious bank. And the third criteria, which is the most important criteria, is it should have an excellent capital adequacy ratio. And there are no shockers. As the video title said, the best bank in this case is Kotak Mahindra Bank. Well, I would give you the numbers behind it. It's not HDFC Bank, it's not ICICI Bank, it's not Axis Bank, and 100% it's not a public sector bank. It's Kotak Mahindra Bank, and I would show you the numbers behind it. So now I talked about loans to borrowers. So it should have not so great loan book growth. And in this case, we see Kotak Mahindra Bank's loan book growth. So if I see quarter one of financial year 2020, which is exactly last year ago, it had 18% loan book growth. But now, if I see in today's quarter, in quarter one of financial year 2021, we see it has a negative growth, loan book growth. It has a loan book growth of minus 1.9%. So, what does it mean? It is not giving out loans at all. In fact, this negative loan book is because a lot of borrowers have ended up paying back their loans, and because of which, since a lot of loans are being repaid and no loans are being given out further, the loan book is negative, and hence we see negative 1.9%. And I feel this loan book should be rejoiced by investors because it is an excellent strategy of not giving out loans in uncertain times. We see the loan book has the growth has been dropping, which in this case I feel is a very good strategy. We should look at, like, nice investments, and not average investments. Look for the best investments, and there are no good credit, good borrowers outside. So the loan book contraction is a sign that Kotak Mahindra Bank didn't find enough borrowers that it could lend money to. Instead, they have made more treasury investments where yields are lower but they are safe. So they're looking for safe assets, like we see in the market itself. In the market, we have seen safe assets like gold and silver going to its all-time highs. It's because the market is looking for safer assets, just like Kotak Mahindra Bank. Moreover, Kotak Mahindra Bank has dispersed about 4,500 crore loans only to small borrowers that have government's credit guarantee scheme. They have distributed 4,500 crores only under the credit guarantee scheme by the government, which shows that they're reluctant to lend to small businesses that don't have a sovereign credit guarantee. So sovereign is basically the bank, so which basically is the government. So they're not giving out loans to small borrowers who don't have government's guarantee. Next, I the second point I talked about high provisions to possible bad loans. So as we know, moratorium levels have been following because a lot of people are paying up loans than they were paying up a quarter ago. Last quarter, I would say the moratorium levels were 26%. So 26 people out of 100 people had availed moratorium from the banks, and now the moratorium level is only 9.65% of the loan book. So the moratorium levels have fallen. All right, they have fallen from 26% to 9.65%. So technically, it should mean Kotak Mahindra Bank's provision should also fall. However, we see even though the moratorium levels have fallen, their provisions haven't fallen as much, which means that even they are risk averse. They don't want to leave out bad loans at all, and they have outlined bad loans or possible bad loans in advance and have provided provisioning for the same, which is an excellent strategy. They are not giving out loans and they are doing provisioning, which is an excellent strategy if I tell you. Now, the last point is the extra arsenal they have. So the extra arsenal they have is, the first is its capital ratio is at enviable 22%. It has a capital adequacy ratio of 22%, which is the highest amongst private banks. I would show you a detailed a tabular column of capital adequacy ratios of various private sector banks. It has 22% capital adequacy ratio, which says that the lender has enough money to take risk, but it is not taking risk because it believes cash is king. And I've told you time and time again, in this scenario, holding cash with you means that you are king because cash is king. The bank has set aside 616 crores specifically towards pandemic risks. So these are not provisions, I would say. These are, provisions for pandemic risk. These are not provisions for credit risk. By credit risk, I means default against loans, but these are provisions against pandemic risk, the risk the pandemic can, cause. So this 616 crores is apart from the provisions they have set out here. They have set out 616 crores in this quarter as pandemic risk cost, over and above the 650 crores it had set out in the March quarter, that means in the previous quarter. So they have a bankroll of 1200 crores just for the pandemic risk, despite having provisioning for bad loans. So this is what I'm talking about, being an excellent bank. And Kotak Mahindra here is showcasing that is the best bank out here. Now this is a tabular column. This tabular column is for quarterly results. It's basically for quarter one results of this financial year, which is financial year 2021. And we see Kotak Mahindra Bank has the highest capital adequacy ratio of 21.2%, which is much higher than HDFC Bank. Or the least is with ICICI Bank. ICICI Bank has capital adequacy ratio of 16.32%. Just so that you know, about 11.08% is the RBI's requirement of minimum capital adequacy ratio. So we see private banks are doing really good. They have very good capital adequacy ratio, with Kotak Mahindra Bank having the highest capital adequacy ratio. Next, Kotak Mahindra Bank has the highest net interest margin. So what is net interest margin? Net interest margin is the difference between the interest rate they give to depositors to the interest rate they charge from borrowers. So as you know, bank take deposits from the public and gives out loans. They take money as deposits and they lend out the money which they have taken as deposits. And the difference between the interest rates is their profit. So 4.4% is the net interest margin, which is their profit. And this is highest for Kotak Mahindra Bank compared to HDFC Bank, which is 4.3%, very close to Kotak Mahindra. 3.4% Axis Bank, 3.7% ICICI Bank. Next, gross NPAs. We see Kotak Mahindra Bank has the second highest gross NPAs. So it is number one in capital adequacy, number one in net interest margin, but number two in gross NPAs, which is kind of double to that of HDFC Bank. Well, HDFC Bank is a quality asset lender, and Kotak Mahindra's gross NPAs can be a problem, but they're not as big as a problem for Axis Bank or ICICI Bank. They have done enough provisioning and they have enough capital set aside. Moreover, they're not giving out loans to average credit borrowers, average credit score borrowers. So we can see Kotak Mahindra is the best bank out here right now. It is at par, or I would say better than HDFC Bank, looking at its capital adequacy ratio and looking at its high net interest margin. However, this gross NPA brings it a little at par to HDFC Bank. Had it had better gross NPAs than HDFC Bank, it would have surely been the best bank out there. So, guys, this is my take. These are my facts and figures, and the numbers speak the story here. And I hope you like my video. Thank you very much. Have a nice day.